All right. So when the market opened on Friday, what's this
Mm-hmm.
right here on my chart? What's this?
That I can't really. Oop, squeezed out for a bigger view. That big old gap right there.
Yeah, we got that
Yeah.
big old gap. So one of the
Uh
first
huh.
things we're gonna think about is where's that gap feeling? Is it gonna feel? But also, if we were looking at one of Kendra's favorite tools, the orb, we can see
Yeah,
it would
that's the one
never
I
crash.
use.
Yeah, but
Yeah.
you can see we got above it and couldn't break back down, and it faked us
Mm-hmm.
out right here. That candle closed under the top of the orb, and then it
Mm-hmm.
stayed up. This would have showed me you need to draw another box. This is what
Okay.
that box looks like. It's not your levels. It's about the range, the trading range. Once
Okay.
it dipped there and it didn't come out, we stayed in this range. So that means there's no trade to take. At the end of the day, I caught a put right here just because I knew it probably would pop down.
Uh
But if
huh.
we start this in this box, do you know, excuse me, do you know the name of what this means when you're trading sideways like that?
It like it's just choppy.
It's choppy, but it's consolidation.
Oh, okay.
So when we're consolidating, we're waiting on the expansion. We're going to either
Mm-hmm.
expand up or down. But if we're not expanding, there's no move to make. Just move to another ticker or get off of it
Mm-hmm.
for today. Because you can see there could have been some money made, but by the time I got into a put down here, it was done. And then if I
Yeah.
get into a call above here, it's choppy. So there's
Yeah.
really not much room for us to expand. The top of the day, naturally, we should have pulled back. We didn't get the little drop until the end of the day. But if you see this and we're consolidating, don't do anything. Like right here, we would have been looking for another move outside
Mm-hmm.
of this consolidation period. There's the high, there's the low, and we could have did this breakdown here, but too much consolidation. When you see it consolidating here,
Mm-hmm.
consolidation until we break outside the zone. When you see that, don't trade.
Okay.
Now, if we're
Yeah.
doing levels, let's just say you want your levels. Have you watched Course Boxy Box video?
Uh huh.
Do you understand the Boxy Box, or can you do it?
Um. So I'm kind of because he says to put the lines like where they wick out. So is that just drawing a line like at the top and the bottom of every wick?
No.
In the
So
no.
I'm gonna show you how I do mine, and maybe this will
Okay.
help. So I'm gonna take off here. So when we start the day, first move, we're going to extended hours. All I'm looking at is what's in the brown. Now, top of mine, we're going to draw the top of that width. And I like to
Uh
keep
huh.
them dotted. Some just a distinction to let me know that this is pre-market or low. But I also would have hit the bottom because a lot of times we try to trade this week and price will start to slip. We'll get slippage inside of there. And that
Hmm.
slippage is I'm trading it to the top, but as we peak here, it starts selling down. So if you're trying to go back in and close your order and you get right back here to break even, you don't get that part of the week. So I'd rather be out. Do you use Weeble or Robinhood?
Robin Hood.
That and you're gonna get slippage in Robinhood.
Yeah.
So I would say in your trade, take the body and just leave the wick as a notation. So if I'm trading
Okay.
up and I know I'm gonna get a call up to here, the top of this whole candle, I'd be trying to get my profits here or midway through that wick so you don't get chopped out because you'll go into Robinhood, close your trade, and come back to the main street and say it'll stay still working or it hasn't actually closed it out. So
Hmm.
be careful there. But this is all we doing. Everything in the brown, I just want to label that. That way I first know how where my levels are for us to trade for that day, and we're gonna have a gap. Once I come back to regular hours, now I see inside the gap, and I say this is one of those levels. Here's one of those levels. We traded in between those levels, and what this
Hmm.
level was telling me from the pre-market high is buyers are giving up. People
Okay.
don't want to buy at that price. Those are Louis Vuittons that were $800 and now they 16 and we're like they was cool at 800. At 16, I'll think about it. That's what this space is. So
Okay.
start thinking about price action as actual things that you buy. If you like candles, if you like purses, whatever you like. What do you like, Janae?
Uh, I do like purses.
Okay, purses. What's your
Yeah.
favorite brand?
Michael Kors.
Okay, Michael Kors. My wife is a coach. I got three denim coaches in the boxes back there, and I'm mad at her because she ain't carried them all. She carrying one right now, but she got, I think it's two, three more in the box. So we got Michael Kors bag. We got,
Uh-huh.
it's the weekend. It's 30% off. This is Michael Kors 30% off. This is Michael Kors in the Galleria, not on sale.
Right.
Are you
Okay.
buying up here?
No.
Are you buying down here?
Yeah.
That week is telling you people trying not to buy and people coming in like, it's on sale, I'm buying it. That's what that week is telling you. This is sellers
Okay.
trying to push price down and buyers are coming in and eating it up every time it drop. This is Michael Kors been on sale 30% off with an extra 10 on the weekend. That's what this level right here is, and this is the regular store no sale.
Okay.
So you're gonna have less people up here. You're gonna have more people down here. Start to look at your chart from buyer's perspective.
Okay.
Also, the safety rule. And do you use the ATR on your chart at all?
Mm-mm, I have the orb, the mogul indicator, and the clouds.
Okay. Add the ATR. Who joined us? I didn't see him. Somebody on iPhone. Hey, iPhone. If you don't use anything else, add the ATR to your indicator group. And I'm gonna show you
Okay.
which one to add. And think about the ATR like the gas in your mileage and gas in your car. When
Okay.
SPY is running really, really hard and it hits 100%, be careful in what direction you're in. Because if we get 100% in calls, start looking for a pullback. Because that's us need to find a gas station. We need to get some more cash because we already hit 100%.
Right.
So to break down ATR, ATR is the average true range
Mm-hmm.
of the price, and it's over the last 14 days. So if I'm using
Oh,
this to
okay.
day trade, I cut it in half because you have a higher probability of hitting 50%, 80 to 90% of the time than hitting 100%, 20 to 30%.
Right.
So most people try to trade the whole range and go, okay, SPY is at 675. It's ATR 7. I'm gonna add $7 to that, and I'm trading at 682. 682 is way up here. We didn't even get there. But if we had to cut that ATR in half and said about $3, $3.50, and we went from here to 665 plus $3, which would have put us at sorry, I said 665, 675 plus $3 would put us at 678. If we had
Mm-hmm.
to just mark that 678 as like the move for the half mark, we'd be right here almost at where that pre-market high was. And that's just using the math. So now I
Okay.
know, okay, we done went half of the ATR already. We might have another move up or we can consolidate. If you go back and back test that throughout most of your days, or even look at your tickers on your watch list, if I go to
Mm-hmm.
TSLL, that's one that went over 50%. SoFi, two. QQQ, QQQ didn't meet. IWM didn't meet. Bank of America, meet. That's three.
Mm-hmm.
Apple, four. AAL, five. We got five tickers on our
Wow.
watch list already that went over 50%, but we had three that couldn't hit 50. So if you try
Mm-hmm.
to overextend it to 100, you put yourself in a lower bracket. But if you do it at the 50, you have a higher probability. So let me show
Okay.
you how does that look for your strike prices. So if we getting in here at 12.95 at 12.91 we have a 53 cent ATR, so like 25 cents. So that means we should be looking at a strike price $13, maybe 13.50. What happens? We got to $13 right there. We got to 13.50. Did we get
Mm-hmm.
14? Not quite. So we didn't go. It almost hit 200% on this ATR. If we use Apple, a more sensible one that we always trade, $5.17, so $2.50, maybe three.
Okay.
We're right here. We wait to get in. Let's break it down with the orb for Friday because that would have been easy for you to get in and see it. Boom. We wait for the orb.
Mm-hmm. I
If
see it
we
now.
add right here, we're at 259 plus $2. So we at 261. Even if we get here and break above the order, we at 261. We probably have a 265 call. If you would have got that 265 right in the money, you would have been good for. Boom. You start using the math when you're trying to
Okay.
pick, okay, what contracts do I need? How much am I going on my spread so you don't trade too far out? But if you're sticking to SPY, keep SPY. If SPY consolidates, you need to be plus or minus $1. If SPY isn't consolidating, plus or minus $2. And that's
Okay.
for your strike prices. So if we open, let's say this is tomorrow, and we're opening right here at 277. I already know in my brain I can go up to 278, 279, and psychologically, I'm sorry,
Yeah.
678, 67. I'm a little dyslexic, so work with me. 678,
Mm-hmm.
679, and 680. Those are my three call contracts that I'm looking at. When the market open, I'm looking at them contracts. Can I afford them or not? If I can't, that's not for me to go move contracts. If I can't afford them once the market open and it is tripping, you need to go to IWM and trade IWM that
Okay.
day.
Okay.
First rule of thumb, if I open SPY and the two strike price is closest to where SPY is trading at, I can't afford it. That's not for me to go jump and go, okay, I'm gonna just go to 682 because I can afford it. Because if
Right.
it consolidates in here, you're gonna chop.
Yep.
Okay, so first morning, I can afford it or I can't. If I can, I got three contracts, 2 to 3 contracts to the upside, 2 to 3 contracts to the downside. That's the morning. Now let's say I can't afford it and I go to IWM. First thing you'll notice is the ATR is lower on IWM. So instead of being $2 to the up or downside, in
Mhm.
IWM, I can do $1. So if we open tomorrow at 249, I can take 250, 251 to the upside, or 249 put, 248, 247. I'll stay within the range of where IWM can move. You're not making IWM and wishing, oh, we just need to drop some more, just need to drop some more. No, I put my contract in a position of a range that it naturally moves.
Okay. That makes sense.
And if you can't afford a spot, don't be up in them queues. Stay off them QQQ contracts.
Oh, I don't even touch the QQQs. I just like to trade because they say SPY is the easiest, but then it's kind of been when I first because I've only been trading for about a year. When I first started trading, it was kind of consistent. Now it's horrible.
But it's not you. It's the market. It's the market
Yeah.
inconsistency with things that are beyond our control. So don't look at it as I'm a bad trader or I'm not doing something right. It's I have to understand that I need to pivot when the market's not moving. If you trade an hour and the market hasn't moved and your contract down, let's just cut it. We can always get back in. We can't fight time.
Right.
Also, if you're in a zero DTE contract by lunchtime, let
Uh
that
huh.
thing go. Let
Let
it
it
go.
go.
Let
Okay.
it go. If it ain't made no money, let it go. Because you can always get back in. Now, the power hour plays that I put in my channel, do not try those in Robinhood because they'll stump you out. But if I say, hey, I'm doing power hour and I'm getting a put, you can always go get the next day's contract and play that play. But don't try that in Robinhood because Robinhood's going to close your contract at 2:30.
Yeah, I'd have to. Weeble's next on my list to learn how to trade on that platform. I just need to play
Why, why
around
don't
with it.
you, why don't you get on my calendar and say, Chastity, show me?
Okay. Show me how to trade with
Yeah.
Weeble.
Mm-hmm.
Okay. Will do.
That's it.
Okay.
All
Now
you need to put in the go ahead.
do you feel like in the morning, like it's because I feel like the bigger moves happen soon as the market opens.
They do, but you also have to let the market settle. So that's why we say
Okay.
give it about 20 minutes or so. Now, if we get bullish continuation or bearish continuation, you don't have to wait as long. But the first 30 minutes of the market is speed dating, and we like to get in long-term relationships.
Okay.
Speed date that thing. If you get in the market and you up 20, 30% in the first, 20 minutes, just take that money and get out the way because we have a higher probability of having a reversal.
Hmm.
So you got about a 40 to 60% chance that we will have a 30%. See that move? This is speed dating.
Hmm.
And then boom, we hit 9 o'clock. What happened? It sells back down.
Right. Yep.
So now what you do, you panic You sell and then you go, dang, I should have kept my call, and you get back in
Uh-huh.
here and it goes up and it sells again and you're like, dang, I should have got a put, and you get a put and it reverses on you again.
Yep.
So two things psychologically. Trust your gut. Two, understand that you will get two opportunities to get, you usually get two, maybe three opportunities to exit your trade. So if you got into a call here, you missed your exit, it came back, you have a second opportunity. It pulls down, you get a third opportunity. You don't always get this many chances to get back out. And also when the chances come back, you are later than here. So this is an hour worth of theta. That's 2 hours worth of theta. So, or 3 hours. So the later in the day, even though it gets back to your entry, your contract premium is going to be lower. So it's best to just take your money when you see it. Also, you can go through a discipline training if you feel like, okay, I be up and I be down, and sometimes I hold it too long or too late. I tell my clients, do a 30-day, a month of 30%. If it loses 30%, close it. If it gains 30%, close it. You can't do nothing but grow your account doing that. But what we get greedy, we want 55% instead of 50. We want 100 instead of 98.
Mm-hmm.
You got to get yourself on a discipline schedule and train your body and your mind, that muscle reflex, to close a trade at that particular time.
Yeah. Yeah, I think that's what it is for me.
Yeah.
Chasing the big moves. It's not.
Are you do you work a 9 to 5? Are you free in the mornings?
No, I work 9 to 5.
Okay. Yeah, just get an evening appointment and just put Weeble help in the comments. It's gonna ask you like, what can I help you with? And just put your Discord name and your name and then put Weeble help.
Okay.
And I
I,
got you on that.
all right. Thank you.
You're welcome. iPhone, you got a question or help, need help?
I was just trying to really absorb and try to figure out how to get on here and watch because I'm sometimes the phone was taking me there, taking me there. I did screenshot. So you use ATR versus day trading and range and percentage. That's the one
That
you
is,
was going
mm-hmm.
to. Okay.
Yes.
And so are you like what are you a support and resistance trader? Like how do you figure out what trade or what ticker you want to enter for the day?
SPY is my boo. So I'm gonna trade SPY every day.
Okay.
My secondary boos are IWM, SoFi, and Bank of America, because if SPY's not moving, I may move to like one of my swing trade tickers and get a position or do research. So it kind of based on the day. I still start out, I'm gonna trade SPY whether I paper trade or whether I'm looking at the chart, but usually I'm gonna trade SPY every day. Now if the SPY premiums are expensive, I do drop down, like I just said, to IWM.
Okay. And can you go by what, and I heard you say, so if it's already done 50% of the ATR, did you say then you don't, or that's a 50% chance that it's gonna go on to 80, but not 100? Is that what you said?
No, so it's more or less like your like the pivot point. A lot of tickers can reach 50% on most days.
Hmm.
So that's why I like for you to trade your strike prices within 50% of the ATR, because most of the chances they can do it. It just gives it less room. So if I'm trading IWM, instead of me being in a 255 strike, I can be in a 250 to 250, sorry, 250 to 252,
Hmm.
instead of trying to make it work so hard, because the movement of what it does in 4 days, we're trying to get that movement in one day because we're day trading. Now, if you get a swing trade, let's say you get IWM, you're bullish, and you get the Friday contract, you could get a contract that's $5 out from where the stock is trading at, because you're giving it more time to move it, because on average in 14 days it moves about $5. Your HER, just think of it as like a timeline sheet from 1 to 14. One day it might be $4, another day it might be 4.25, another day it may be 4.75. This is just the average. But on average, you can't really expect it to move that whole amount in one day without some news or momentum. So that's just why I recommend at least, start with the half unless you are swing trading.
So that when it's showing 4.56, does that,
Hmm.
it's a possibility that it's gonna move $4 on that day, or it's already moved $4 on that?
No, that's just the range for the past 2 weeks. It has moved $4.56 up or down. So
Okay.
now you're anticipating. So that tells me the DTR day
Mhm.
trading range was $2.14. So we know it didn't hit its full ATR.
Okay, okay, okay. So the average that has been trading is $4.50 for the last 14 days, and so far today it's only moved like $2.14. So it's a
Mm-hmm.
possibility that it could still go $2 more.
Yeah. But you don't want to be outside of that range because a lot of people have picked contracts and again they'll go 260. Well,
Uh-huh.
you're way out of the move even though
Okay.
you could afford it.
Don't go 3 or 4 or $5 out. Then is what you're saying.
Nope. These are your strike prices. ATR
Okay.
lets you know what strikes you can get on that day.
Uh-huh. Okay, okay. All right. And what's
Because
those?
some people have problems with picking strike prices on their own.
Okay. Okay. Cool. So then, if it was like a $6 day and it then only moved $3, then stay within $3 of the move.
Mm-hmm.
Okay. Okay. Cool. Thank you. And what's the boxes that you have on your chart?
So this one is the orb. Kendra likes to look at the orb a lot, and that box is a gap. So
Oh.
I just have it's just regular gaps. If
Hmm.
you just type in GAP, it's just the regular gaps.
Okay.
Also, if you're getting comfortable or wanting to understand your indicators better, go to YouTube and go to TradingView. TradingView has a whole YouTube channel breaking down how to use the indicators on the website.
Okay.
You
Okay.
can also hit here, hover over the indicator,
Hmm.
go to the three dots, and then hit about this script, and
Hmm.
your little box will pop up to teach you about how to use the script.
Okay. 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 And now, and I heard you mention SoFi as well. So what else do you look for before deciding you're gonna enter a trade or which way to enter it?
So my SoFi trade, I'm in a kind of a leap. The SoFi contract doesn't expire until January. January 16th, I think. And with SoFi, I was looking at their earnings and the plays on that. So, I've been watching them since like May 2nd. I know how they move. I know how they've been reporting. I understand the guidance behind what the company wants to do. So decided to invest in them long term. They do have earnings coming up here on Tuesday. So I'll hold my contract. If it stays up, I might swing it. I don't really lose a lot because I'm already up like 50%. But I can take my profit and then just get back in it the same day as they report. If they report good, then I miss out on that move. But I also do have shares in them. So it's just all about understanding the company, what they do, and not just knowing their name, but getting a little bit of their fundamentals. You can be a technical trader with no fundamental training. Some people are just fully fundamental with no technicals. I like to be a little bit of both.
Okay. Okay. All right. Thank you.
You're
Um,
welcome. I saw somebody else come in, but it doesn't. Andrika Scott, got a question? Need some help?
I was just here to see what I could learn.
Cool. What do you trade? What platforms do you trade on?
I use Webull and I mainly trade SPY or SPX.
Profitable, or do you take your own trades, or do you just take the signals? And are you profitable?
Yes, I'm profitable. Sometimes I do it on my own. Sometimes I do the signals. I usually hop on live with Hannah
Oh,
Marie.
yep.
Yep. So
You in
actually,
there?
anytime any of you guys go on, like if I'm available, I hop in. Just you guys always dropping gems and stuff. So
Perfect. Do you have a trading plan set?
yes and no.
Why
I
yes and
have
no?
I have an idea of what I want. My life is a little hectic right now, so I'm waiting for things to settle down so I can really lock in the way I want. But right now. I'm just kind of, some days I trade, some days I don't.
Hmm.
Um, but even if I choose not to trade, I still hop on the lives.
Cool. When I say trading plan, I mean like a structure. So if a trade goes against you, you cut it, or if you get a particular profit, do you have something set in stone before you enter the trade?
Oh, yeah,
Okay.
for the most part.
We
But
got to do
yeah,
it every time.
I
If you
know.
mess up, it's gonna hurt you. You're gonna be like, oh, I'm gonna let it ride five more dollars. I'm gonna let it ride 5 more minutes. We want to stick to our plans, and like, again, whether that's a dollar amount or percentage, once you get that, let's get out the way.
I've been working on being more consistent with that. Like taking profit, I'm a little more disciplined. But when it goes against me, a lot of times I feel like I get out too soon and
Hmm.
then it'll go the way that I thought. Not even that I thought, the way that my tools. So sometimes I'm not trusting my tools.
Hmm.
So I will say that I'm more profitable when I take the signal because I don't psych myself out of the trade because I'm listening to whoever, you know, called the play. So then it's like, okay, they'll like Hannah, for example, if we're in something, she's like, yeah, I'm still in it. Like, yeah, there was a little pullback, but da 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 da. And then I'll stay in a little longer than when I'm trading by myself. So for that reason, I do like that live trading atmosphere.
Hmm. I'm gonna say this too. How comfortable it doesn't sound like you're comfortable in your charting. Because if you were, you would be more comfortable in the pullbacks, even if they're not around. So I would want you to kind of practice charting more, so you can see chart setups. You will see those setups and not get stumped out, and kind of be more confident in your own place too. Because if you're listening to Hannah live every day, if you're trading by yourself, you should still be able to hear Hannah. You know what I'm saying? If you're in the trade and
Hmm.
say, oh, it's pulling back, it's going to bounce off support or it's going to bounce at the bottom of the orb, you should still be able to hear those with confidence without us. The whole goal, again, Hannah could lose her voice. Um,
I remember when that
Something could
happened.
be, internet could be down and we're not there. The goal is for repetition and not that's the secret sauce too. The goal is
Hmm.
for you to copy with repetition. So think about the time when you first learned how to write your name. They gave you to trace the letters with the little dotted lines on how to write your name. But
Hmm.
eventually we took that away and you just had to use the paper without that frame. That's what the live sessions are for to do. It's not to handicap you where every time you write, you always trace it. It's for you to be able to muscle memory and remember, oh, when it comes here, it's going to come back here. When it hits this level of support or resistance, it's coming back, or it's going to bounce here. So I think if you kind of change your mindset when you're on the live call and not let it be such a, not make it a crutch. Kind of be like, okay, can I see where Hannah's going before she goes there? Can I see that? Can I start to see where the price action is going to play out for this particular ticker before somebody else tells me, and now you're really getting it. Because sometimes we go into the live session, we just wait for somebody to hand it to us, and then we go on about our business instead of maybe, okay, I'm gonna watch it later, I'm gonna get in the rhythm, and then that'll help build that confidence there when you're doing it by yourself.
Okay. Thank you.
You're
I will
welcome.
definitely start doing that because I definitely don't. I guess I just need to make the time so there's no excuse, but I don't always have the levels charted on my own. So
Okay, I
that's
got a cheat
another
code
thing.
for you.
So,
Let me show you. I'm gonna show you. I got the cheat
okay.
code for you. Let's go. I'm gonna go to just some I don't trade. Hey, what did I just go? I just did a BLDR. Build a never charted this before, never traded it before, but I just did a pot. So I'm gonna go look at it. I don't have it.
Your screen
I was
sharing.
going to say, I can't see your screen.
Okay, let me share it again. Hold on one second.
And then when you go over that, could you possibly like point out some things too, or if it's pulling back, or maybe what we can recognize and know that it is just a pullback and not a reversal?
Sorry guys, I'm reading stuff and looking at stuff and I didn't know y'all couldn't see it because I had paused it. So, can you see it now?
Yes.
Y'all can see it?
Mm-hmm.
Okay. Let me get my Bluetooth back on. Come on. I'll just turn it up because it might be. Okay. Can y'all hear me?
Yes.
Can
Yes.
y'all hear me? Okay. And you can see the screen again.
Yes.
Yes.
Okay.
Oh,
You
did you
got
hear what I was asking you about the pullback?
uh-uh.
Oh, I was saying when you're doing that, could you also show us like when it's a pullback, how we can kind of help recognize that it's just a pullback and not a reversal?
And not a crystal ball, but yes.
Okay.
And it goes off like some of those help tools. So the first one I'm gonna show you where to find it, and it's going to be support and resistance levels with breaks. So like I said, teaching you, let me how to is this no, I got it sharing. Is it still okay? I think it's going. When you're on your chart and you need to look at support and resistance, I didn't want gaps on either. I'm gonna take that off. You want to have something to retrace. So if I've never traded this, but I'm going to trade it tomorrow, right now the chart isn't marked up. First thing you would need to do is probably do a top-down analysis on it. But let's say you don't have time for that. Court just called it. You want to see the levels. Come to your indicators and type in support and resistance levels with breaks. This is going to give you, by Lux Algo, it's going to give you a little helpful tool for you to see those levels. So even if you're not on the chart or you've never marked it up, you can see where smaller support and resistance levels are. Now, sometimes they leave off ones that I would have added, but all you have to do is come in, relabel it, come back off. Even if you're on the free version and you only get two, label your support and resistance, and then just take it back off and go back to the other indicator that you want to move. So I can use this one. I'm on the plus version, so I get like quite a few of these, but these are just the ones to teach you on. So if I hide it, now when I come back, oh, now I see the levels of support and resistance. If I'm trading and I'm looking to see if it's a pullback or if it's going to be a reversal, I'm looking for it to test a support or resistance level. So right here, this is consolidation to me. We're inside a channel. It's consolidating. If we break above here, that's breaking that area. If I'm in a put, I need to get out. Um, like if it's a reversal, you can see it actually closes. So depending on which time frame, if I'm day trading, I'm gonna be on my 5 minute. If I see a 5 minute candle close below a previous support, I know it's reversing on me and not just a test. So you want to look for a full close 5 minute candle to close below that level or above that level to see are we getting a reversal or if it's breaking a level. Does that kind of make sense?
Yes.
So if we go here, so this is why I say it's not the everything. I get the setup. It's coming down. It closes below the support. I get it put and then it bounces right here. So yes, it broke support. Yes, it still reversed on me. So even though you know the tools, things will still happen. That's not a bad setup. If you took a put right here and it reversed out here and you had to get out, the thing is, I need to know that, okay, I had 7% gains, it's lost, it's down 10%. I need to probably get out because it is reversing on me for a V recovery. What we do is we want to be right. You were right. It closed below the support. It broke down to another support in reverse. We didn't close. Let's just cut the trade and continue on with life instead of beating ourselves up and saying, oh, it's going to come back down and I'm going to get it. I know it's not coming back down because we did not break this support level here to come back and test this one. Not until we break this support when we come back down and test this level. So if I even come back over, What happened? We still have not broke that level to come back and test here. So this is why I say sometimes it's important. A lot of people are like, oh, I delete my lines every day or they don't save them. I keep my lines on my chart so that I can see when things are going to retest. I always need to go back and look to the left to see where are we going back to. Because price is going to go back to where it was. Think about the thing that you like to buy the most, whether it's shoes, candles, whatever. When price gets back to the one you like, you come back and buy again. When it gets too high of where you won't want to buy, you stop buying. The same for the people who purchase stocks. If this is their stock, these are their Louis Vuitton shoes or Jordans or purses. When it's at a level that they want to buy, they buy a lot. When it's going too high, they stop buying. It's the same way buyers do in the market. Make sense, or did I lose you guys? Y'all don't have to stay on mute. Y'all can talk to me. It's very informal.
No, that made total sense. So thank you.
Hmm.
I was over here pulling up the chart on a different screen. So I just got it open. So if you don't mind, can you explain that one more time? Because I kind of missed it trying to pull it up.
Yeah, the tool or support and resistance.
Support and resistance.
So she asks, how do I know if the stock is reversing or if it's just a pullback? And I say it's not an end all be all because we're not the buyers and sellers in the market at the time. We're just taking advantage of it. So sometimes we're looking for a confirmation. I usually look for a 2 point setup or something for my confirmation, which is like, okay, we're testing support. That would be one. And then we actually close under support. So that would be two. There's my 2 point setup to get into a put. But it does, I do have another support line here and it bounced. Majority of the time, we're going to want to be right. Instead of just cutting the loss at like negative 10% or so here, we're going to hold it and let it run right up here. And we are never given an opportunity to come for this to come back down for us to take profit or to kind of get to break even. That's because we did not break the previous support. Here's the support, there's the support. I don't like to make my support and resistance levels red or green because it's going to trick your brain. When I'm thinking like I want it to be blue, yellow, purple, something that's not going to give me any emotion about up or down because depending on where I'm trading, that line can be something else. Trading back here, this line is a resistance. Price is trying to push up and over. But as we get later in the day, this line is now a support. If we don't break below that, we are supporting. So under my feet is support, above is resistance. And depending on the time frame or where I'm trading is what that particular line is doing. So some people that just get stuck in their head, it has to come back and test support or it has to come back here. But in all actuality, depending on the time frame, that line could be support or resistance.
Okay, thank you so much. That was very helpful.
You're welcome.
And that was a great question because I have the same questions when I'm in the market. I'm wondering, is this a, is the structure changing or is it just a fake out?
Perfect. And again, looking, I'm gonna go back to SPY because I know a lot of y'all are in the group and we're trading SPY. But when you see the market, what did I cut off? Gaps. When you're in the market, we have a gap. Naturally, your mind should go to all gaps must fill. The question is when. But if we're trading and the market is tight in this span, that's consolidation. We're consolidating. If we don't push above here, there's no call to take. If we don't break below this low point right here, there's no put to be taken unless you're taking a power hour play. But if you see that, don't trade. Majority of the time, you're going to be in the trade somewhere right here. And let's say the trade is $70. If it does not move, you might have went and you're let's say you're in a put. We go from $70 to like maybe $81 and you're like, I haven't made no money. And then it pops back up and now you're down like $15. And you never get profitable, especially if you're in a zero DTE. So another rule of thumb is if you're trading and you're in a zero DTE and it's not profitable by lunch, let that thing go. the probability of it going back up is very slim. You're just holding on to what's guaranteed that contract going to zero at the end of the day if it doesn't turn around. Now, in order to save that, if I start trading from the morning or from 9 a.m., I can trade that 0 DTE from 9 to noon Central Time. After that, I can switch over and just get the next day's contract. If I can't afford it, I don't need to trade it. I can trade something else. And a lot of times, that's what makes us stay in 0 DTEs for so long is because we can't afford to get the next day's contract and we don't get close enough to the money on the same day contracts. Helpful? Yes, no, maybe.
Yes, that was very helpful. And in the group they do pull out those zero DTEs, so that was very helpful. And also the point that you made about not making your lines red or green, that was very helpful as well.
Yeah, like don't it's just it's a mind thing, and a lot of people think trading is about, oh, I gotta be the best, I gotta be in this the longest. No, you just gotta know the psychology behind it, not to make the same mistakes that we made before. I could teach somebody, if I sat down with somebody who could learn really fast, I could teach them how to trade in one day. Will they be the best? No, because they don't have the experience. It's the same as driving a car. Once you drove, the first time you got behind the car and started driving, you weren't an expert. People pull out, different things happen because you're not the only thing affecting the road. It could rain, somebody could be sneezing, somebody could be trying to feed their baby in the car, somebody could be reading a book, whatever. Those aspects are things that are out of your control that affect your trading. You have to now react to that. So I need to make sure my seatbelt is on. I got to make sure my mirrors are set. Those are the things that you can move around in the market to make it better. So think about what you're doing on your charts is adjustments to the market. If the market goes away again, if you get into a car accident because somebody hit you, that's not your fault. But we still got to take accountability for it. So that's the same way with your trading. If you get in here and you lose money, okay. Trump made a tweet, your trade went the other way. Boom, we gonna live the trade another day. Somebody else did something. Airbag deployed, we back in it. We got another life we about to go trade with. And we just keep going. So sometimes we're really hard on ourselves because one, we don't think we traded long enough. Two, we don't think we're the best as everybody else. Three, we're not an analyst or something like that. All you doing is trading with the same you last year. I'm trading with the same me that was before 2020. That person didn't even know how to trade. That person didn't know a brokerage. So I'm winning. Whether I'm down or not, I'm still winning. So start kind of battling or picking how you're trading based off the same way you do when you get up and go get in your car. If you get up in the morning, go get in your car and put your seatbelt on, check your mirrors and start driving, anything could happen. You could get in a wreck or you could make it back home. You could make a great trade or it could go left. Any of those things. But you're doing everything you can, making sure you're sticking to your rules, making sure you have a trading plan. Because usually 9 times out of 10, if somebody comes to me and they say, "Oh, I did bad," or I felt like, "What did you do? Did you have a rule? Did you have a plan? Did you break your plan?" Those are the times when you mess up your trades. I didn't go with my plan. So it was like, oh, I had planned to go to the store, but I deviated and went to my friend's house. Now the store done closed and I didn't have enough money. Oh, all these things that happen when we deviate from my plan. My plan to trade tomorrow, I'm gonna get into SPY. I'm gonna risk $150. My plan is to make 50 dollars or so. If it gets more, great. If it doesn't and I only get 30, cool. But the goal is not to lose any money. But if I lose, let's make the loss small. A lot of time we will not let our runners and our winners go far, but we will hold on to a crappy play all day and let that thing go to zero. You'll be too scared to take $5 profit, but you will lose 50 in the negative. We got to change the mindset and psychology behind it. Again, if you have trouble with the plan or assessing, do a 30-minute stop, a 30-minute take profit for 30 days. I promise you your account will be in the green after those 30 days. If you're not disciplined, you won't be. But we gotta try. Like I put myself on 30-minute probation. I can only trade this one account. Once it goes to 30, and it's plenty of time, I got it marked down in Facebook Messenger. 30%, I'm out, y'all. Y'all will see me say it all the time. If you're on discipline, we're at 30%, close your trade. But it helps grow your account and it helps that muscle memory. Like, oh, I saw 30%, boom, I'm out. We
Just put
all
it
guilty.
on the whiteboard.
What was that?
I just put it on my whiteboard. That's good gems.
Yeah. And start there. Like, it's not that. And you know yourself as a person. Like, for me, it's not hard for me to cut sugar out of my diet. I'm cool with that. So I might only need 5 days of being on discipline and it's a routine. If your discipline takes you 15 days and you got it and you go, okay, well, I'm gonna move. I saw again, especially if you do the gyms and you journaling and you look at the past 2 weeks and majority of your trades went to 50%. Well, now you can move up. You have a logic behind all of my trades I took this week, hit my 30% goal, and I could have went to 50. Now the next 2 weeks, now you can scale up and say, okay, now I'm taking 50% and I'm gonna cut my stop loss at 20% because my trades are getting better. I'm understanding the charts better. So you don't have to sit in time out forever. Some people only need a day. I have people that trade, I teach them to go back to it, they're disciplined and they do it day after day. But this market is very different. It's also very addictive. And so you have to deal with it like an addiction. People trade and it gives you endorphins. You can't control that. You're going to get excited when you make money. So now we have to train that addiction and that emotion to like, okay. And sometimes you got to psych your emotions out. Make a trade and go, woo, I made a trade. I made some money. You hear the monotone in my voice. Not like, oh, hey girl, I hit that trade. We made some money because your body is signaling you to get that feeling again. So if you train it to be very monotonous, and like I say, boring trading pays the bill, you're going to be more consistent and you're just going to make some money and you're going to close that laptop and go on about your business. Now, it's not to say we're never going to celebrate, but you want to kind of counter psych your brain and your system to not feel a certain way when it's doing something so it becomes natural and very repetitive. When you get up and go brush your teeth, ain't no cheer team on the sideline saying, yeah, you brush your teeth. We grown people. You supposed to get up, take a shower. It becomes a natural thing that you do. So you respond more naturally to it and not chase it. The psychology behind it is very strong. And that's the harder to work on than just trading itself.
Trading has paper trading has really helped me on that note.
Oh, what have you been paper trading?
QQQ, SPY, and IWM.
And have you taken any live trades or you still just been paper trading? I can't hear
Just
you if you was talking. Oh,
traded
just
from
paper. It was going in and out. I'm sorry. What'd you
yeah,
say?
what happened and then it just muted. But no, I take real trades now, but it gave me good confidence in a few of my strategies, paper trading on entries and
Perfect.
exits.
Perfect. I see some more people got in. I don't want to this is very informal, so you don't have to sit on mute. So oh God, okay, stuff moving around. Mr. Macadicious and anybody else, if y'all got questions, y'all want to look at a ticker or question, this is just open office hours to help people. I'm gonna try to do these once a week. It just when the schedule permits. I had some people miss their one-on-one, so I was able to come in and do this. But people who can't afford the one-on-ones, I would greatly recommend when you see we have free office hours, come in and ask questions. Um, so you can, pick up on it and then be able to pay for more long-term or one-on-one. But if you got questions, you want to look at a ticker and need some help, need some guidance, I'm here.
You said
Okay.
the trade when you said cutting the trade when it goes 30%. How do you know if the trade goes 30%?
So inside your
I don't know if
brokerage,
I'm
yeah, are you what brokerage are you using?
I don't really trade, but I started with Think or Swim.
Okay, so if you're in Thinkorswim, let me see if I have some pictures up and I'll show you guys where you should be looking at on multiple brokerages. You want to be inside your brokerage and on the contract, and that way you can see the trade moving. So let me pull out some winning trades or ones in the channel based on which broker you use. Oh, I am in my channel. Let me scroll up. So here. Like this trade is down 5%. This one's up 1%. So I'm watching that to see where the trade is moving to. So if I see this, I'm up 13%. And if my goal is 30%, now I actually cut this trade at $7. I told my client to do 10, but I didn't want to watch this contract and the market stayed bullish. And for some people, they'll be like, well, you just took like 7%. Like you took $7. Well, I was down the day before and the today's total return. The day's total return was 31. Well, if I see Bank of America struggling, the contract is going to expire in a month. I just took it out. I said we might have some pullback. I'll just take my gains and get out. But this is the number that you're looking at. I would prefer you guys look at your total return, not just today's return, because if you were down the day before or something like that. But if you're in zero DTE, it's going to be total return, and you're just looking for whether that numbers goes to negative or positive 30, and then you get out. That's how you build your discipline. If you're in a different broker, like here, this is Thinkorswim. Contract is up $98. I'm up $204. I could have been greedy and been like, nah, I'm gonna hold it because I want $100. But psychologically, I'm up 204%. I'm well over what it usually moves. Let me take my money and get out the way. Let's look at some more. There's my family. All right. Another one here. Again, I got two contracts. Zero DTE. It's 12 o'clock. I need to be closing these because what did I say? After lunch, the probability is a little slim unless we're in another setup. If you started the contract that morning and then you're holding it and it doesn't go anywhere, that's different. If you're getting it in the middle of the day and you're seeing some reversal, you can hold it a little bit longer. But zero DTE contracts bought in the morning, let's go on and cut those by lunchtime and then get out the way. Also, the big thing on comparison, me, Court, and Kendra, Hannah, we've been trading for a while. So we might trade and say, hey, is zero a hero? But if you're negative for the day and we throw a zero a hero contract, just kind of skip that. Because my account, I could be up $200 and I do a zero a hero contract for $37. If I lose it, I'm okay because I'm already up for the day. But if you're down for the day and you still may be down if this trade goes left, that's not a risk that you can take. A lot of people don't understand what that means if we say zero a hero, manage your trades, or how much your account can absorb. If you're up for the day, if I'm up $100 and I get a $37 trade, I'll probably be okay with it because I'm up profitable more than that risk of that contract. If I've made $100 or $200 in a day, I may risk 50 to 75 again of that the next day. I'm not risking all of my profits the next day because that's how businesses work. They don't risk all their capital to go all in on the next project. They have some reserve. They're risking far less each time. So again, looking at the contract, total return 64%. Good to close that contract. I think I closed one and then closed the other one. And so that one contract, when I closed one, I was left with 143%, $43 return on those two contracts. And don't mind the fact that traders, we don't care about our battery. My phone was about to die, but still making money. So it depends on which brokerage you're in. That contract can look different. Let's see, there's some more. Again, Thinkorswim in the position it's eight. I'm up to $8.50. It's 13%. So just looking at your percentages, looking at your dollar amount, seeing if it makes sense. Again, if you close this contract at $8.50, you've made more money than 97% of the world. 90% of the world, probably more than that, don't have a brokerage, have never traded, and will not end this year profitable.
Okay, so like when you open the contracts, right? Say I heard that like with putting calls now, and the zero DTE, like they expire at the end of the day. But you only lose like what you only lose your premium, right, for both of them.
Correct. You can't lose more than you gain. So if we go back to one of those examples of the contract I was in, let's see.
Really? You can't lose more than the premium?
Not more. This is not Forex and you're not leveraging. So if I got one contract for $37, my max loss, if you go into any of your brokers and go to max loss, my max loss is $37. You can't lose more than you put in on your premium. That's it.
Wow. Wow. I learn every day. Wow. I did not
That's
know that.
all you're risking. So that's why I say understand how much you're risking and how much your account can absorb. And most of the time we over leverage because we want more winnings. But you can see $37 can get you over 100%. You
Oh,
don't
yeah.
have to trade a lot of things, and but that's all you got. So this is why we recommend beginner traders to trade on a cash account because if you got $200 and you're trading with 200, that's all you can lose. You're not over leveraging, you're not borrowing against margin or anything like that.
That's that really just gave me supreme confidence now. You shouldn't have told me that.
Yeah, that
Yeah.
gave me some great confidence too. Because like
Yeah.
I know Forex, you set stop losses and
The
like
stop
some
loss is my premium.
Yep.
exactly,
Well,
bro.
no, we
Exactly.
just gave you some rules. Stop loss is 30%.
All right. All right. You're right. Sorry about that.
No, but like with me, like if I put that in a trade, if I put like $30 in a trade, I don't mind losing $30. I could care less.
That's true too. Some days you will have that, but on your discipline trades, you can't lose more than that. They're not gonna come in your brokerage and be like, "Oh, you went over. We're margin calling or taking your money." Your cash account, whatever the premium is, that's all that you are risking.
That's what I'm saying. Like if I risk $30, I don't mind losing $30.
Yeah, yeah, that's good. Yeah, that's it. There, it's not over leveraged. We make it harder than we need it to be.
Yeah. You're right.
Let's see.
I've been trading QQQ a lot. My contracts are really no more than $300, but I definitely wouldn't use that whole premium. Nah, as a stop loss. No way.
Yeah. And again, QQQ, those premiums are high. I always tell people when you got high, mid, low. So we're gonna do QQQ, SPY, or IWM. All of those will give you the same, give you decent returns. I like high delta, low theta. So that's why I'm looking at contracts a lot differently. A lot of times when we look at it, and I can look at it on a day. If the theta is high, I'm not swinging on those plays. A lot of people like to swing. And I'm like, hey, the theta doesn't even absorb, like really understand. If I swing this play, how many dollars does SPY have to move overnight for me to absorb that theta and open up profitable? It's a lot of times we'll open up and you may only make $2 or $3. Was it really worth swinging? I could just wait till the next day. And especially if you have a problem with sleeping. If you swing a trade and it keep you up at night, stop trading. Stop taking them trades.
Uh,
Because there's nothing you can do. You can't change it at midnight. You can't change it at 3. You can't do nothing until the market open. So if swinging contracts overnight keep you up, man, sleep like a baby and stop swinging.
that's the only thing that I haven't gotten to understand is theta. Can you kind of help me out with that?
Yes. So theta, you have delta and theta. Delta tells you how many dollars you make for every dollar that the premium goes up. And theta lets you know kind of like your fee for holding the contract. I never really want my fee to be more than my gain. So picking the contracts can be very different. Let me look at let's just do SPY because that's what most of us we'll look at SPY and QQQ. But let's say tomorrow I'm bullish on SPY and I get right in the money. So I'm gonna do 668 call. I'm purchasing the contract for 152. I'm gonna just do the ask. And now I have my delta and my theta. My delta tells me for every dollar that SPY goes up, I'm getting 43, and my overnight theta risk is 41. So, in order for me to absorb that theta, SPY needs to open up a dollar or higher so I can cover this delta by holding that theta. Now, when you're day trading, this should kind of fluctuate, but the closer you get to the end of the day with that zero DTE, that theta is going to eat up. Because if it's gonna eat up the cost of your contract. That makes sense.
Okay. Yeah, it does.
So I like to look at contracts 2 to 4 weeks out or leaps. So like in my SoFi contract does not expire until January 16th. It's a 40 strike. So that contract now is at 108. My delta is 23. My target on SoFi naturally is $40, but 30 and what really 31. So 31, maybe 35. I'm looking at $1 to $5 move on SoFi, and I get $23 for every dollar move. But look at my theta. I'm only risking $1 to $2 if this goes against me as far as my theta.
Mm.
That's a stronger risk to reward. I like having a lower theta compared to my delta. The more time you buy, the less theta you have. But again, that premium is going to go up as you do so.
Wow. I've only been buying the next day contracts. I try to stay away from zero DTs. This is really
Yeah.
helping me.
Yep. You can also come hunt the train. So Sunday, today is the perfect day to do some homework and go hunt the train. So if I like contracts and I'm looking out, one, your best Friday is going to be the third Friday of the month, which is your witching Friday. So if I was looking for a contract on, again, I can use SoFi. And I won't use SoFi. SoFi has earnings this week, so their premiums might look a little different. So let's do Amazon.
I keep hearing about witching. I don't know what that means.
So anytime you have something you don't know, do not go to Google first. Go to investopedia.com and search for it here. This is going to give you the most simplistic breakdown, but we'll just put in witching. It's going to bring up quad witching. But it's the simultaneous closing of stock options, futures, indexes, like they all expire on that day. So there's way more volatility on that third Friday contract. So you'll just see more volatility. Well, you'll see more liquidity in the volume and open interest on the chain for that particular ticker.
Okay. Big help. Big help.
That's it. That's the simplest term. It's just when these options. So if you trade futures, you see futures contracts. Like people sometimes mess up when they're trading futures if they get in the wrong contract because that contract is expiring. So there's not more people on it. It's in the next one. But that's all the witching is. It's just the simultaneous expiring of stock options, index futures, index and single futures all at the same time.
Okay.
But let's do the visual of the contracts. Y'all gonna make me put this in Opus and splice it up for YouTube content.
Oh yeah. I was gonna ask if this is being recorded.
Yep, it is. I wasn't gonna send it out, but y'all haven't asked anything personal. Like I don't like to, like if it's just office hours, if people have personal stuff, I don't like to, send that back out. But I'll probably put it behind um the thing where just if you have access to the link, you can look at it. Let me stop sharing. Oh, okay. I was waiting. I was like, I thought it was gonna stay frozen, but it came back. Let's go back so we can look at that chain. So Amazon, if we're looking at Amazon this week, plus or minus like 220 for puts and then like 230 for calls or so. This is this week's. The chain looks good. Volume and open interest over 1,000 on both sides. Looks good. But the theta, if I'm in the 220, I have a higher theta than my delta, so I need for it to move more than usual. But if
Wow.
I go out to a witching week and I go to the third Friday, and if you're in Thinkorswim or Weeble, you can see these are weeklies. This is the monthly contract because it doesn't have anything, or it'll have an M next to it, so you know, but it's the third Friday. Now I come out here to the third Friday. Now you can see it's a little bit thinner, but it's space, and you can see the ones that's over 1,000. But I greatly reduce my theta. Now, yes, I do have to pay more for the contract, but my theta is reduced. That way, you're not having as much pressure. If you have high anxiety, you need to buy more time on your contract and give them time to move when you're swing trading. If you don't, then you're okay. but you're gonna see much lower theta the more time you buy on your contracts. And this one is a little bit more comparable. For every dollar I move, I get 39 versus the weekly where I'm almost at a 1 to 1 on my day delta to theta comparison.
And that's $16.
Mm-hmm. So that's like your little fee or your cost to kind of hold this contract if it's not going your way. But that
Mm.
also could be an idea for your stop loss. If you know the theta on the movement, I can set my stop loss at $16 or at 32 because
Oh,
I'm already having to see my delta is only going to be 39 if it move ahead. So I can just make my theta my stop loss.
wow. Okay. I'm on my whiteboard. I'm writing everything down.
Yeah, this is going in my mental.
Can you explain that one more time? It didn't click for me just yet. I'm
Yeah.
sorry.
So sometimes we don't know what our stop loss should be. How much should we risk? We're just looking at money and numbers or how much it should go because we don't have any discipline. But if I'm in the contract for 780, I don't really know what my stop loss. I could say 10%. 10% would be $78. Or I can go based on the theta. So if it's moving and I lose like one deviation of theta, that's $16. Or I can go two and just make it 32. So if my contract loses $32, I'm gonna get out. I don't lost two deviations of my theta. This one in the comparison looks a lot higher because Amazon trades with a higher share price. But if we go back to SPY and we just look at those zero DTEs, it makes a little bit more sense. So when we come down, you look, what's my theta? What I'm gonna do? Look at that. If I'm in a contract for 202 and then my delta is 46 and my theta is 39, that's kind of like my stop loss. That's not a bad comparison because you've lost like the theta for that day. Like I lose $40. That's 20%.
Okay, thank you so much.
Hmm.
Oh man, that is good help. Been
I
doing all this trading and never looked at theta.
Yeah.
yeah,
Or
same.
you don't know why you're losing money or you don't know how much. Like you can already go into this trade and see what you're losing each time.
Each day, I would have lost
Each
30.
each day, yeah, each day I'm losing 39 if it's not going in my way and I'm not holding it. But you will know ahead of time on your swing trade, this is my theta, this is how much I'm standing to lose. And if the stock is going your direction, you kind of negate the theta. So if my theta is like $1 or less than $1, it's kind of a negative theta. I'm not in a lot of risk to hold that contract.
Oh, so just hold.
Yeah,
Hmm.
so that's why I say when you're looking out, again, I know all of y'all are mostly here to make the day trade money, but if I go again on the swing trade like SoFi and the contract that I'm holding, my theta, I'm in the 40, my theta is $1.08. So am I worried? Not
Right.
too much. I'm
Oh,
not risking a whole lot. That's very low. You'll lose $1 and not even care.
right.
Like walking out the house, $1 fall out your purse. You're like, oh, it was $1. Somebody say keep the change. You'll let him keep it. But this one is making me money as I'm holding it.
It's a dollar depending on how much you much and how much you have and don't care.
That is too. So let's say it does hit. And I'll show y'all in comparison one that I had already called. I had already called this contract right here. The 20. So far 20 January. Let's see. This contract in when I called it, it was $86. This contract is now $1,005. The theta was $1. But look at
Wow.
the delta. Every time this moves $1, you're making almost $100, and all you had to do was pay 86 to get in. I did a breakdown on SoFi on my YouTube channel. If y'all have not followed my YouTube channel, I should just go subscribe.
I'm about
I
to.
see that.
Um, Let me find it. Eh, So the bigger picture on SoFi was had you been buying 5 shares every Friday, dollar cost averaging, you would have gotten 105 shares. They would have cost you about 2,000 and like $80, but they would have been worth 3,000. And you would have been you all you were doing is just buying the shares and holding them. So this is my channel, KBDB Consults. Um, I'm slowly growing and bringing more content. Mm,
Can you put the link in the
tracking.
chat?
Yep.
Perfect.
If you want to go a step further, if you like long-term swings and this is, outside of the day trading, my mentor has a very, very great channel. He's more of a long-term trader. Want to know who I learned from? This is one of my teachers that taught me a lot.
Got
But
it.
he's a long-term swing trader. He doesn't do a lot of short-term, but he goes over a lot of microeconomics on how we can incorporate what's going on in the economy and the world and how we can relate it back to the markets. And he also does a weekly stock talk. And this is very helpful for your week. If you don't know how to break down or prepare, this will give you like a little overview, and they're very short, not usually more than 10 minutes. If
Do
you
you
want to
have?
hear me, oh, go ahead.
I was just responding to the text. She said you were a blessing.
Thank you. Also, By the Hood, I've done a couple of Friday shows with them. They've given me the grace of letting me come on a couple of times to give Corey, Kamari, Corey, and Jimmy. You want to know Bitcoin? Jimmy is your expert there. Corey is an expert teacher. They do have a village, and they do a Saturday school. If any of you have kids, they do a summer free, like investment summer school. So definitely sign your kids up for that. If you go back to some of the older videos from this summer, you'll see those classes there. But again, these are the resources and people that I use on learning how to trade who've given me platforms to be able to trade and to teach. So these are the channels that I would recommend for you guys. I'm going to stop for a second and pause that. I'll record it while you're saying that.
Okay.
Okay, say it again.
All right. So can you please give me some advice for working while trading? So I work a 9 to 5 and I day trade.
Depending on your brokerage, I would say you need to make sure you're setting your stop loss and take profits. And until you have more free time, kind of focus a little bit more on swing trading or short-term gain. So when you're trading, you're going to be more in a scalper position because you're not going to be on there all the time because you don't want to look at the charts the whole time that you're working too. So scalping and taking smaller percent gains, 10 to 30% or 10 to 20%, and then just keep snowballing, rolling that account can be more lucrative than trying to day trade and not being able to watch and take losses. Also, expanding your strategy on swing trading. So instead of you being in microwave plays, which is going to be buy now, get it now, you're going to be in crock pot plays. You're going to buy these contracts and then hold on to them and let those premiums marinate and then sell them in the future. So that takes about finding, okay, what companies fit my budget, what companies are in a growth state, and that are going to be affordable, and I can see those contracts expanding over a short period of time. This is a great time for people who are working a 9 to 5 to start day trading and have swing trades because we should be going into our Santa Claus rally where the market just booms over the next 2 months because everybody's going to be shopping and traveling for the Thanksgiving holiday and planning for Christmas and New Year's.
Okay. Thank you so much.
You're welcome. If you want
And do you,
particular tickers, we can talk about those too. I love Bank of America. I love SoFi. Apple and Amazon can be a little pricey, but those are going to be good too. And then think about some of your retail companies, Walmart, Target. Target may be a little iffy, but they're going to be some still supporters in there, even with their DEI mess. And then like Best Buy, Marshalls, Burlington, Ross, some of those retailers.
okay. Thank you so much.
You're welcome.
How do I find cheap contracts?
Cheap contract comes into hunting. You have to be a hunter. You need to start looking at the chain. I would narrow it down. I would not look at more than probably 10 tickers. But once you find your tickers that you like, then you start hunting the chain. Once you hunt the chain, you're looking at those um, you want to look at the volume and open interest for the contracts and how much time you're giving them and what move are they making. Are they moving up, moving down? Once you see what direction, you want to follow the money because there will be signs. Like I say, once I get rich, there'll be signs. When people are trading particular tickers and knowing the move, there are signs. You're going to see way more activity on specific chain and at specific strike prices. So start out with those third Friday swing trades and then start looking at the chains and finding which strike prices the big money is looking into, and that's how you find them. But majority of the time, it's just the same tickers that you like. Again, with SPY staying within that certain ATR parameter so that you can get the reward that you want sooner. Most of the time, every ticker can make us some money. We just don't take profit at the right time. But start hunting. Hunt the train. Sundays are great. Like today, we can start hunting because we're about to get toward the end of the month. So October is red October. I think we're 50-50 on selling down toward the end of the week and then getting a pop-up toward November. I would probably be looking at Wednesday because Wednesday's your usual pullback day to kind of get some swing positions for November and December.
Cool.
Also, don't look at that for like companies that are trash. If you like a company just because you like a company and it's down, it's probably gonna still be down when stuff reverses. So make sure you're looking at good companies to swing. Um,
Got it.
Divine diversity, welcome in. You got questions?
Hey, thank you for having me. No, I don't. This is my first one. I'm just taking notes. I'm actually sneaking as we speak. I'm at work.
Okay, cool, cool, cool. Well, I just wanted to come in and let people know about me. It was just a free call for my people inside of Discord, and I decided to expand it to Facebook for those that want to know. I've been making posts about people wanting to learn the trade. Everybody's not in a financial space where they can learn the trade, or they're having to get into that space because they have been laid off or furloughed. So I am doing a 5-week mentorship with people, 10 people. We will meet on Saturdays in the morning or in the evening. That way I can get both people's schedules flexibility. But all the sessions will be recorded. So if you miss, you'll still have that to make up. And then once we complete the 5 weeks, everyone that completes it will get a free one-on-one with me. That's just to say, okay, I need a more customized plan, or I need a little bit more help that I didn't get in class. So that it's just to help the people who can't afford my basic one-on-one. My one-on-one mentorship are 2K, and that's one-on-one for 8 weeks, but that's more people in less amount of time. So I was just like, let me do it in a small group setting, something a little bit more affordable for people, so they can learn the skill because no one can take this from you. And people that they've gotten us in a place where we are like, oh, if I got a good government job, I'm not gonna be late. I'm financially stable. And now they're showing us if they can feed us, they can starve us. They gave us food stamps, they gave us jobs, and now we have to work without any income. So I wanted to get more people in, teach them how to trade options so they can, supplement their income or let it, retire them. So that's just the focus, just to answer people questions for my traders who've been trading. They might, again, may not have time to hop in on a one-on-one call. They could ask here. I've gone over support and resistance. I've gone over a few indicators, market psychology. It was like a master class in one. But if you have
You're
any
pretty.
questions about how to start, what do you would need, what's the smallest amount you need, these are most of the questions people have. I set you up with a brokerage. Brokerages are free. We'll use Thinkorswim, Webull, or Robinhood. If you're thinking about how much do I have to start with the trade, outside of investing and learning, I would say most people can start with $100. I have clients come in, look, I got $15,000, and I'd be like, look, go put that $15,000 in a high yield, take out like 1,000. we'll start with that. But I'm not having people trade with money that they can't afford to lose or that the rent money. This is supposed to help you learn a skill and grow. So we're not going to be over leveraging or losing using too much capital. You want to start small, something consistent that you can rinse and repeat over and over again. With the classes being recorded, this is something you can pass on to your family. You learn, then teach your kids or teach your spouse or significant other, teach your aunts and uncles. So it's about branching out. One person learn, then they go spread it back to the masses. And then when you get tired of trying to tell them over and over again, you can bring them back to me like, look, Chastity just gonna have to deal with you because I can't teach you. But it's again just trying to get more people into the space of the stock market because I didn't see anybody like that looked like me trading or teaching, and when I did, I ran with it. I've had three, three or four female African American teachers. So I was like, I can put myself up there with them now that I'm teaching. But most of the time, you see white guys in this space. Now we're seeing more men and then more women come into the space and teach. And that can be helpful. I know a lot of guys can feel intimidated trading with other men, and they find learning from women to be a lot easier. Women, we just learn like with each other. If there's no competition, we can collaborate a lot easier together. JP, you hopped on. You got questions? You trade already? Or you got questions about the market? Struggles anywhere?
Yeah, I trade already, and I'm part of the BNP Discord. Just saw it. I just saw the message. It's like be in here and see what
Perfect.
I
What's
can.
your favorite ticker?
My favorite so far has been SPX,
Okay.
WM, and gold. Seem
Oh.
to to get that down pretty good. Dealing with that. Actually, just started studying up on uh, NVIDIA this past
Mm-hmm.
week, and man, finally locked in. Crazy. I locked in on Friday, and I'm telling you, when I knew it was about to reap to the upside towards the end of the day, I tried to put in a limit order because you know what? Let me do a limit order, not in the market. It couldn't fill me in, and that stuff just ripped. I said, "Oh
Mm-hmm.
my god." And I was like, okay, okay. Well, at least now I know that it does work. This way, and I'm like, okay.
Mm-hmm.
So far, it's been good, though. I do appreciate the community that we have with Mogul, with BNP, and the other ones. Because again, it helps a lot to see how you guys are thinking and you guys take the trades that you guys do take, and also, even if it's a loss there, we can understand why not just always going to be a win-win-win, but the probability of a win is very higher than the probability of a loss. It's good to see that in real time as well. So yeah, I just came in because I saw the Zoom and I was like, hey, let me hop in here, and knowledge is power. You can never get tired of knowledge.
But sure, I appreciate that. I appreciate you hopping in. Again, I do support and resistance. SPY is my favorite. I'm liking swing trades and I'm going over more swing trades for the people who work 9 to 5. That way that they can still get in and not get burnt every time that they can't watch. So getting that set up in the strategy for swing trading is going to be ideal. And then again, I always go with this, especially for people who have high anxiety. Trading brings out a lot of your emotions and anxiety levels are heightened. So day trading may not be for everybody. Scalping may not be for everybody. But there's a part of trading I think works for everybody. So whether I'm a scalper, day trader, swing trader, investor, um, collecting dividends, they're just multifacets of the stock market where everybody can get their footing in. They just have to know what type of person they are and what kind of investments they want to make.
That is
But thank
correct.
you.
Fun fact is, I started off as a swing trader. For the life of me, I was getting so frustrated because I'm like, man, what is going on? I can't hit. And but then again, I had to take responsibility of the fact that the knowledge I have now, I didn't have that
Gotcha. It makes
that
sense.
that exactly. So I couldn't just, even though yes, the emotions was there and I was getting frustrated, right? But then again, when you're listening to people say, "Oh yeah, put in for this ticker, go ahead and get this trade, get this," and you just go ahead, you're blindly just following, right? And you've not done your own analysis, charting, it could hurt you. And it was really hurting me really bad. And you know what, I can't do this no more. I need to really sit down and learn how to pay attention to the swing trades and see how the market is moving and all of that. The swing trade hurt me first, but then day trading came in and that changed the ball game for the better. But I need to get back into swing trades though. 'Cause right now, I won't lie to you, I'm still on the fence about swing trades. You know what I'm saying? But I think it's a very necessary skill for people that do 9 to 5. Like myself, I do a 9 to 5. I'm in cybersecurity field. So again, sometimes I'm gonna miss some trades because again, I'm in a meeting trying to take care of an incident here and there, So swing trades definitely will come in clutch at this point.
For sure. And
Thinking
these are
about
the
that.
times. So we have this span toward the end of the year where the market should be bullish going into the Santa Claus rally. And then we'll take a look at the end of the year and I'll show you guys the seasonality clock if y'all have never taken a look at it. And no, it doesn't always repeat, but it can be quite similar year over year. So I'm gonna just share that real quick too. So seasonality, we can see this kind of red October, we get it down. But toward the end of the month, we start to get bullish here. From November to December, almost a 2% move, 1.5, 2% move toward the end of the year. So I definitely see spot probably hitting 700 by the end of the year with these momentum. And then toward the end of the beginning of the year, January to February, get a little pop and then we pull back down and kind of come under. So this is where I see positioning for us to beginning from now, well, end of October to January, we get bullish on some retail and kind of great companies. Companies is definitely going to be shipping and shopping motivated. Beginning of the year, just scalping, day trade. Then after February, February March, we can get into some more swing trade if the time permits. Also, we're going to see a lot of we might start to see interest rates cuts. When we have interest rate cuts, we see capital being more lenient and banks being more lenient with credit and how much interest rate that you can pertain or how much debt that they can take on. So again, once people have more capital, they're going to do more shopping. You can see more houses being bought. That does increase competition. But we can see that take off if we do see lower interest rate. Again, lower interest rate, people are going to spend to keep up with their lifestyle, and that's going to keep a more robust market. So keep that in mind coming toward the end of the year and into next year.
And I saw the news as well. It said China and the US came to a consensus. That's a good
Oh,
thing too as well.
it is, but they're so bipolar. One minute they're cold, one minute they're hot. You just never know,
That
like
is
who's
true.
gonna do what. Like Trump can come in and say, "Oh, I hate China," and then by the afternoon he's like, "Oh, I was just playing. We cool, we cool," and the markets run again. So we just have to know when to play into it and not again. Like I say, we're dating. We're not married. We're married to the money, not the market. So we don't want to get married to plays and we can't pivot. We're like, oh no, it has to come back down. Oh no, it has to work. It doesn't.
Yep. I said I'm loyal. I'm loyal to the money, not to the stock, but the money.
There you
That's
go.
where the money goes, I'm going there too. Like IBM this past week definitely did good.
Oh
Tesla
yes,
started off, on Friday started off a little bit, bearish, but ended up pretty good. Nvidia, the same thing. Just my last play for Nvidia, I couldn't get that field. I was yeah, walked away with the green. So, I'm loyal to the money, not to the stock. I don't care.
for sure. We got anybody else? Well, we got about. I'm gonna stay on for about 5 or 10 more minutes if nobody new hops in. Like I said, I forgot some of the people on Facebook, and I wanted to make sure that they got an opportunity to hop on. Yeah, we will let a losing play, and I'll tell y'all something. Like I said, with the addiction. We get into the stock market and there's a drug. It's free and we all get a hold to it. It comes natural. Like it's just boom, it's at your doorstep when you start trading. And it's called hopium. That drug will have you stay in a bad play all day, hoping and praying it go up. When you just need to let it go. Like again, if you're down on a trade, if it goes back, all we got to do is hop back in and get back into play. But one, we may over leverage, one, we may over trade. So, one, having a trading plan, knowing how much you're going to trade out of your total portfolio, not overextending that. And again, once we've hit our goal or we've hit our max of what we're trading, we just get out the way. But once we get off that drug, I mean, hopium is out there, it's free, it's plenty of it, but we have to get out of it. Again, we can be religious, but this is one of those things. You can pray to God, Lord, please let this turn back up and I'll get out. That's not the way it works. The markets are going to move the way they're going to move. We just have to use it the way we need to. And so, again, it's a strong, it's a heck of a drug, and we all have it. We just have to know how to manage it because you can't control it when it comes in. It's like air. You get that hopium, my trade is going, it's got to go back or it has to do this. When we start to do that, it'll mess us up as traders, and we have to hit that reset button. Have to go cold turkey. Again, get on some disciplined plans or go back to paper trading. But anybody out here, if you get hooked to that hopium, shoot me a DM. We can work on some strategies to get out of it because it's hard. Yeah, when we see watching a green trade turn green, your endorphins start kicking off. You want to stay in them, and then back to red. And you're like, and we'll tell you guys, don't let the trades go red. Manage the trade. Don't let them turn red. And that's because we know it happens, and we can only accept, we can only work with y'all so much, and we can't see your portfolio. We don't know exactly when you got in, so a lot of times we may say close a trade early, and they still run, or we leave a runner because we want y'all to secure something without the market, turning around on us.
That's a fact. And one thing man, when I started, I never had was again a trailing stop loss. Man, I remember I saw a trade leave from was up 2,500 and I lost 1660 that quick. And I was like, that broke my heart.
Yeah.
A couple of months ago, and now it's like, man, never again. That trailing stop loss, you better set your trailing stop loss. Know how much you're going in, like you said, and then once you see that market start reversing and you know you're nearing that trailing stop loss, get out and just wait for a re-entry. Don't try to pray because you just gonna hurt yourself more. You gotta put a trailing stop. If you're already in profits, set your trailing stop loss underneath your TP1 or TP2, so that way, no matter what you're still walking away with something and then leave the runners. I never knew this, learned this, and that changed my totally because that made I became emotionless. I
Mm-hmm.
didn't have no emotions now. That trailing stop loss saved me a whole lot of money because before that, I'd be sitting there and praying. I'm like, okay, God, just bring it back to break even and I'm gonna get out. I promise, break even. I'm
Uh-huh.
gonna get out. I don't even care about the profits no more, right? When you were just up for 500, $2,000 and it was greed. And that's why I tell people you got to know what your risk acceptance is, your risk tolerance, and you got to be disciplined. Don't try. And I told myself all I need is $400-$500 a day when I first started, and I made 2,000. That was greed. I should have been got out and just wait.
Mm-hmm.
But again, I didn't understand this, all of this terminologies and how this market should be working. But now that I know that and I got that trailing stop loss, 10% is the most. The moment I start making profit, I set it right underneath the take TP1. That's it. And I don't care. If I get the other 75% out, whatever stays as a runners, that's okay. But trailing stop loss is very important, guys. Very important.
Yeah, and he is talking about SPX. So SPX moves very fast. It's not, I wouldn't say jump into that as beginners. Um and you can, and trailing stop, you may not see that in a lot of your brokerages. Robinhood for sure does not have that. You can do it in Thinkorswim and some of the other brokerages or trading platforms. So the better your tools and the better the brokerage you use, the better you have at trading. So just think about that. Baby steps is with Robinhood. Then you'll step up to Weeple and Thinkorswim, and then you can do Ally and E-Trade or Fidelity. I don't really care for Fidelity; it's a little clunky, and not really user friendly for mobile. And I like to be able to not have to have my laptop if I don't need it, unless I'm reading charts. I just trade from my phone. But whichever one works best for you guys is what you want to use. So we got 5 more minutes. If you got a question, anything, come on and hop off mute before we wrap it up.
So earlier I heard you talking about theta.
Mhm.
So if I'm understanding correctly, what you said was you always want your theta to be lower than your delta.
You would prefer it. It's not always going to happen, especially trading the ETFs. So I would prefer it be lower, but sometimes it will be higher. But just depending on the stock that you look at, again, if I want to set my stop at like my theta or like not letting that move too high on, what your profit and stop loss is going to be. But most people never even ever look at theta. So once you start watching it, you understand how it moves with your ticker and how much losses you'll take or not take by being in the best contracts.
And then you said once you lose two times your theta, you cut your loss, basically.
Yeah, that's one of the rules you can have. So you can either do a 30-30, a 30 stop loss, a 30% take profit, or you can use your theta. But again, the theta can vary depending on which one you're using. So sometimes theta could be less than $1. I'm not if it's like less than $1 and it goes to $2, I'm not gonna stump out of my trade at $2. But when you're trading strike prices where my delta is like 40 and my theta might be 42, I know I'm losing because I'm not getting any delta if I've hit two deviations of my theta. So it's just something to kind of watch how your tickers work and start paying attention to the theta and how it affects those different contracts, and then see, okay, do I want to just leave my stop loss as like one just at the theta or my theta times two? That was just an example of something you can use when you don't have a system in place.
Okay. So when you're picking your contracts, how do you normally go about it as far as the Greeks? Because I know it can be like your adrenaline can be up and you feeling like, really panicky. I know for myself when they call out when you guys call out the plays in a group, I'm just like running to my phone and I really don't be having time to look at the Greeks. But can you run me through your thought process of when you're picking options?
Yes. So when I'm looking at the Greeks, I'll look at the delta and theta just in comparison to each other. But my main thing is making sure my ATR is good and when I'm picking a strike and I'm not too far away. I always have a higher probability of getting in profit. The problem is we don't take the profit soon enough. So sometimes we're only going to get 10% or 18%. But at least my delta let me know, okay, if it moves $1, I'll make this amount. And if I just at minimum get the dollar, how many contracts do I need to take to get my goal? So let's look at, I'm going to share my screen again to kind of give you an example on SPY because I'm a visual learner. I think that helps everybody.
Yes, thank
So
you so
let's
much.
say I want $100. My goal, or like JP said he want $400 a day. So let's start with that. We want $400 on the day. I'm trading SPY. SPY is bullish. I'm going to take the 680 call. 680 call, I'm gonna just say $70 for learning purposes. It's 69. It's gonna cost me $70. I want $400 on a day. Well, I know that SPY moves. If SPY moves $1, I'm gonna get 23. I'm assuming it moves two, so let's just say roughly I'm gonna get $25 per dollar move, and SPY moves $2. So that means I'm gonna make $50 per contract I can take, and it's $70. I want 400, so I need to do 400 divided by 50 and how many contracts I need to take, or how many times does SPY, how many dollars does SPY need to move for me to get out my goal. So in my head, I do this math all the time. So it's easy for me to see it and think about it in quick terms with rounding up. So I know that I'm gonna get about roughly $25 if SPY moves $1. I'll get 50 if it moves two. So I'm gonna take that. So I want $400. So I need SPY to either move $4, and I got four contracts, or I need it to move two. I need it to move $1 or two and have like eight contracts. So I'm thinking about how many contracts I need to get the particular move that I want. And again, visual learning. Let's get the calculator out because my dyslexia be off. Where's my calculator? And let's make the math. So one contract's gonna cost me $70. If it moves $2, I could make $50. I want 400, so 400 divided by 50. That means eight. I need eight contracts to move $2. So if I'm getting this, I got eight contracts times how much it costs me. Boom. So I'm spending $560 on eight contracts of SPY at 680, and I'm looking for them to move $2 where I would get $400 for the day. I've already had it in my head. How do I do that, Chaz? How do I do that if y'all are calling the plays and I don't have time to get there? Well, before the market even opens, you can see roughly what the contract prices are and the delta and theta. Once it opens, it will vary a little bit, but you'll have a slight idea of what you need to make. So when they call the contract and they say, court says, okay, we're taking 680 calls, or if he goes through and says we're taking 675 puts, you already having your idea of how many contracts I need to make. Even if I just need $100. If I want $100, I know I need to buy three of these contracts and they move a dollar, I make 90. Or I need to buy this contract and it needs to move $3 so I can make 90. You have an idea of how much a contract or a stock price needs to move in order for you to take profit before we even give it to you. I trade the same ticker, so all you got to do is go to SPY every day and go look at the contract. You know they're going to be within the $2 move, so up and down $2. I know how much the contracts are. I know how much the delta and theta are. Now again, it takes routine and consistency to get here and start training your brain to know, okay, how much money am I spending? How much money does it take for me to get to my goal? Because a lot of times we want $100 or we want that 100% on goal and target, but we don't even know that the contract can't even make that or it won't make that move. If I'm in here and this contract is $2 and I know SPY only moves a max of seven, if it moves the whole seven, I'm only making 14 because I'm in some kind of like cheap contract with a very low theta. So I have to know slightly what's going on the contracts and how they move. Once you get that math, it'll help you understand, okay, how much do I need to spend today? How much is it even in my budget to make this today? Because if you got $200, the contracts are spiked, you know, the data, you might only be able to make 40 to 50 that day. And that's okay because you made a profit more than other people, think about what they can make. So I come in and I study the charts. I come and study the option chain, and I don't do this a long time. Like I won't study no more today because I've been on the call with Charles and I got two more calls with people. So I've already looked at the chain. I already looked at the tickers. So 1 hour on the weekend, Saturday and Sunday, looking at my max of 10 tickers, looking at the option chain and what we give. That's what you do. Throughout the week, 10, 15 minutes in the morning, 15 minutes in the evening. You may spend an hour in the evening. No, nothing over there. Analysis paralysis is not going to make you a great trader. It's not going to give you no profit. Implementation and understanding the background and the math behind trading makes you a great trader and going to make you a profitable trader. Just because this is not like going to school and taking a test. Oh, I know what the HDR is, or I know what support and resistance is. Okay, well, go do it. It's like telling somebody I can go to ChatGPT and make it build me a architectural plan exactly how to build a house, but that don't mean I know how to build a house. I gotta go actually implement it. I gotta go hit a nail into some wood. I gotta set a foundation. I have to actually go put in reps to go see, can I do this strategically? Does it play out? No, land may shift, it may rain. Those are the type of things that come up. So that's why we continue to trade so you can know how to pivot when things go different. Know how to say, okay, it's hitting resistance. Let me close this trade, get into another trade. I know the math behind how much money I can make. Okay, I don't have enough contracts to make that. I may not be able to make 100 today, but I know I can get 75 and I'm gonna be good with that 75. One of the main things I see people mess up with, we've been trained to give our jobs way more leniency than we do the stock market. I go to work, I get up and go to work, I work a 9 to 5, I get to my check is deposited into my account, and my check is short. And I go to my boss and say, hey, my check's short. Oh, the overtime or the hours weren't left on, but it's gonna be on your next check. I apologize. What do we do? The next week we go back to work and we still work. And with the anticipation that they're going to pay us next week, you got to give the stock market some of that grace too. Today you showed up, you wanted 100, you got 50. Okay, it's not like stock market is scam. I ain't gonna come. It's the same way. It didn't show up and give you exactly what you expected, but you know the market's still gonna be there next week for it to provide for you to what you wanted. So if we kind of give the stock market a little bit of grace when we're trading, it makes your trading journey a lot easier and a lot less abrasive when we don't make the money that we want.
Thank you so much, Shati. That was very helpful.
You're welcome. I just keep whatever knowledge I have, whatever I can bring to you guys to make y'all better. That's all I want to do. Again, I can't do it all in one day. That's why I don't teach in like one day. Because I'm like, if I go over everything in one day, y'all will be mad. Y'all have been to start thinking about what y'all eating for dinner, what's going on tomorrow, what's the game, all of that stuff. So I try to get as much information in a short period of time where I got y'all trapped, and then y'all can go implement it. And then next week when I do office hours again, you can say, okay, Chaz, I implemented, I made some mistakes, help me fix this because you don't know the mistakes you make until you get out in the field. So y'all won't even really know if this was truly helpful until next week. And then y'all will be like, wow, okay, or nope, I still need help. So that's why I put spaces in between stuff the way I teach instead of doing this like 4 hours straight or 5 hours and stuff like that because me being even a student in pharmacy school, I sat in 4 hour lectures. I was playing on my phone half of that time and then having to go home and teach myself because my attention span is not going to let you sit there and retain. You can listen but not retain in 4 hours. It's not the way our brains work. We're gonna wander off. It's just gonna be information overload. So when you sit down and you try to study for 4 hours and you're wondering, dang, I just read this stuff and I don't remember, it's because it was information overload. Do it in small pieces with repetition. Start getting in your car when you gotta drive somewhere like 30 minutes. Cut your YouTube video on and listen to the replay. Then you'll start hearing. Y'all are gonna hear Hannah in y'all voice. Y'all gonna hear Court's voice. You're gonna hear Kendra's voice. I hear their voices in my head when I'm trading, when I'm thinking about certain stuff. And those things resonate with me because I practice and I study it and I hear it over and over again. Then it becomes a routine. It becomes something you implement daily. So that's what you have to do with this skill. Just keep implementing, keep practicing, and not give up on it. Again, most of us don't give up on no job. They usually have to make us quit or they fire us. Same way with the stock market. Just keep the money not going nowhere. Your business can go out, they can run out of business. The stock market, it can crash. They're not gonna let it burn. This thing will be around long after us. But 3 minutes. I appreciate y'all. We went a little bit over. If y'all got anything else, let me know.
Yeah, I love how you broke down that theta and delta. Because to be honest, I never really cared about that. I would be 100% glad you broke that down. That was some knowledge right there. Because I never paid attention to
I didn't either. I didn't either until about a year ago.
that. Makes a lot more sense when it comes to your contract selection, though. That makes sense. Did not know that.
hmm Now you know how, again, it's like making an eighth grader do 12th grader work. You want 100 or $1,200 in the contract, ain't gonna never do that. No, we got to get in contracts and let them reach the potential they're gonna make and be more profitable. I know I need to get 5 contracts over here to make that goal, or two instead of me making the contract make work too hard. Make the contract do less work, just get more. Once I figured that out, I was like, you can buy one contract. It cost me $10. It goes five. Then all I needed to do was buy 20 contracts. Once you start doing the math, you can go buy cheaper contracts and just buy more, and then they have to move less. Makes your job much, much easier. Delta doesn't have to be more than a theta, but you just want theta just be almost negligible or low. But you just want to do the math between the two. I don't like high theta. Like if I'm swinging a trade, I don't want to swing spy contracts and the theta is like 151, like $151 or something. I'm not swinging that. Theta got to be low for me to swing on. Like I don't usually swing spy unless I'm thinking there's going to be a strong move due to some news the next day. But other than that, I don't swing. But I'm gonna get this rendered. I'm probably gonna put it on YouTube and put it in Opus and splice it up in a couple of. It might be some short form content. Yep, want theta to be lower. and then I'll get this out to you. I'll probably post it in the long form. If you're on Facebook, send me a DM and just hit replay. That way I can send you the link because I may not post it full. And then if you're in Discord, just shoot me a DM. Go into my channel or go back into the social channel, click my name, make sure it's me, and then send me a DM and say replay. That way I can get everybody who showed up here to replay. But I appreciate y'all coming up. This was fun. Yeah, this was fun.
Thank you. Not to cut you off, Chastity, before you leave, what can we do to help you? So, like, is there a way we can share your links or anything to our people? If there's anything you want from us, I would love to help you in any way I could because you helped me a lot today.
I mean, just to show up. You share me with other people. You can go make Facebook or Instagram post or TikTok and say, this is the person I'm learning from. Sign up. Let them know about my group mentorship that starts on the second, or the one-on-ones. Again, anybody that come through y'all, they get the discounted one-on-one price. But I just say, go back in the testimonial channel in Discord and just say, hey, I showed up for office hours. This is what helped me. That's the best thing, word of mouth, and y'all getting y'all people on. Go teach somebody else. Just go tell one person something you learned about today,
Okay.
in this session. That's the best thing. You going back to tell somebody or teach somebody else lets me know or lets you know that you got it too. So find one of your trading friends and look like, hey, Chad showed me this. Let me go over with you. And then you be like, oh, she said some stuff I forgot. Let me go back and watch the replay again. So again, my main thing on y'all being able to know what to do is if you can go teach it to somebody else or at least explain it to somebody else. And then you know you really got it. So practice that. Even if it's to yourself, take some time, cut your YouTube on or cut your recorder on and try to teach yourself something you thought you knew. And when you fumble, go rehash that out and then come back. That's going to help you in your learning. I learned that a lot because I'm an only child. So I didn't have anybody to really go ask or somebody older than me to go ask. I'm the oldest. So I had to teach myself and then try to teach it to myself again or go try to tell somebody else. So that's how I kind of get stuff. I do it with my daughter too. When she wants to learn something, I go teach it to myself and then I go back and teach it to her and see if she can teach it back to me. If she can't tell it back to me, I probably didn't do a good job. So I tell her, let me teach it to you, till you teach it to me, and we go teach it to somebody else. That's 4 times, that's 3 times we done tried to do something. I tried to teach it to you, you tried to teach it to me, and we gonna go try to teach it to somebody else. So that's 3 times you done went over something and tried to learn it. And you should get greater after that.
Okay. Thank you. I'm definitely going to share and go on a testimonial and everything. Thank you so much.
I appreciate y'all. Thank you for even asking how can you help me. Again, my goal is always to help people, and my background is medicine, so it do no harm. So I have a hard time asking others for help or how can they assist me. So I appreciate you asking for that because that's something I got to work on and thinking about when somebody asks me what I need help with, like, and I be like, I don't really know. So I'm gonna work on that so I can tell people, But again, the main part is sharing me with other people so they can get help. And let them know I'm budget friendly. Somebody could come to me and say, "Look, Chaz, I don't have it. I don't got it, but I need to learn." And I'll say, "All right, this is some of the things I need you to do." If they can go do the free stuff and follow direction, I usually help them there too, or I'll find sponsors. I have people inside my group and people who pay for one-on-ones and they want to give them away to other people, but I don't like to waste them to people. So, if they need help and they don't have it, I'll look out and see if I can find a sponsor for them, or if they somebody will sponsor a one-on-one for them. But it happens. So that tell people don't let money be their fear. Let their motivation to learn be that what they need to get it.
Mm-hmm. I will. Thank you so much. And I'm definitely going to send people your way.
Thank you. Well, I appreciate you all for showing up. Give me a little time. Just make sure you shoot me a DM or a Facebook message so I can get those replays to you. But I'm lazy and I got like 2 or 3 more one-on-ones, so it'll be later tonight when y'all get this.
All right. Have a good evening. Thank you so much.
Thank you. Thank y'all for showing up. Can you find a sponsor for me? All right. Shoot me a DM and I'll look for a sponsor for you. That's all you gotta do is ask, and I'll find one because I got people who got one-on-ones they want to give away. So I'll definitely look for a sponsor for you. You're welcome. Yep. Just shoot me a DM if you need a sponsor. Just put in the DM sponsor, in your email address, and then I'll let you know if somebody has sponsored one for you. I'll reach out to my clients like who got one-on-ones they want to give away, or who wants to buy a one-on-one for someone. People show up for a lot of people. I think, like I said, I gave away 2. I think Rich sponsored somebody in the chat. He had a really great week. I know one of my other ones, Miss Phoenix, is sponsor people. So you just never know. Even the people who win, sponsor. Okay, I got y'all. Just like I said, DM me sponsors so I can try to find y'all sponsors. It's gonna be kind of quick because that class start the for the one-on-one. Those will be rolling for somebody to help y'all for the mentorship. I have to try to find. I might only have like one or two sponsors because for every two people somebody signs up, I'll let somebody in or I'll do a raffle. So stay on the lookout for inside the Discord and my page to get once I fill up, once I get to 10 paid people, I can definitely raffle off a position. So, yeah, I'm always trying to help. But I appreciate y'all. Y'all have a good one.